know what happens.
All right, ladies and gentlemen, thank you so much for joining us on this beautiful Thursday morning. This is Beyond Stocks. I am Chihiro Kurokawa. I have a great guest for you today. It's Mr. Jeff Murphy. And so really excited to share with you what angel investing is and what that process is like. We're going to learn all about angel investing through Jeff and his organization. But before we get into that, I want to talk about what Beyond Stocks is. This is the premier community that we are forming to help high income earning people invest in assets outside of the traditional system of stocks, bonds, and mutual funds. So we're all about alternative investing, and angel investing fits right into that. So before we get into this conversation with Jeff, I want to thank our generous sponsor. This type of podcast can't happen without generous support. So this episode is sponsored by Porter and Company CPAs. And whether you're running a deal or you're investing passively, you need an accountant who knows about private offerings and partnership taxation specifically, right? And so Porter and Company is the company for that. So reach out to my man, Vince Porter, at mytexascpa.com. And with that, Jeff, thank you so much for joining us and welcome to Beyond Stocks.
I'm so happy to be here, and thanks for inviting me.
Wonderful, wonderful. Well, can you tell us a little bit briefly about your background and how you became an angel investor, and then we'll get into your organization and the wonderful things that you do.
Well, yes, of course. And I had a corporate career, sales, and started with domestic sales, and then because I grew up overseas in Venezuela, I learned Spanish, and kept it up in college, and had the opportunity to run a trip to Acapulco with a company, and said, you know what, this sounds like something that would be fun to do for a living, not just run a weekend trip for customers that won a prize. And so turned that into my language skills, and I did manage sales teams for a company called Case Logic that does accessories for consumer electronics. It's evolved quite a bit over time, and then that led me to being recruited by Ericsson to do similar stuff with mobile phones in Latin America, and had a great run when mobile phones were something new, which is, of course, dates me a little bit, but it was an exciting time, and we opened up markets like Colombia and other areas in Latin America, and it was a great ride. I also then transferred into the enterprise group, where we set up channel management for phone products, and in a time when things were really evolving from less hardware and more software, and that led me. As I left Ericsson, and we also had moved to Texas at that time, I thought I'd really like to work for smaller entrepreneurial companies, and that led me into this whole startup area. Had the really great opportunity to work for a company called Mindbody software, and work for them for a while, and then found myself being recruited back into the mobile phone space. Best decision I ever made, because then the founder asked me to serve on their board when the company was new, and servers in a closet and that kind of thing. And they were an early SaaS play back when SaaS was really just coming on. And Mindbody software, for those who know the story, then I was on the board for about 7 years and saw this whole transition and the value of really quality investment groups, venture capitals, funding that brought them from C all the way up to F and beyond in funding, and then they went public on the NASDAQ around 2015 or so, and And then I started to get into investing and really had this idea that I'd invest in a company and convince them to hire me for business development. And that worked out. And it actually, by that time, I had joined North Texas Angel Network, or NTAN, as we call it, with its acronym, and also had invested in accelerator group called Tech Wildcatters, so I could be mentoring companies. And not it was a two-way street where I was we'll talk some more about this, but investing in startups is like joining a whole new industry. You have to learn what it's about. It's just like joining any kind of other area, whether you get into oil and gas or software or whatever. Startup has its own world that you live in. So that got me into it, and I invested in this company and did work for them, and we exited back in around the during the pandemic, and then anyway, so then shortly after that, I was like, I really would love to do some different stuff, and the position of executive director for our angel network. By then, I was on the board, and that position became available, and I thought, I could do that, and fortunately, I was able to take up the position in 2022, and I've been executive director for North Texas Angel Network, since then. So that's
Got
kind of
it.
a brief history of my evolution from corporate sales into being in the startup business.
Got it. Yeah, thank you. Now I can get a sense that you are a traveler based on the eclectic background behind you. So that's very
Yes,
cool that you spent some time in Latin America. As a side note, my wife has spent a significant amount of time, cumulatively multiple years in Latin America as well, including Venezuela. But anyhow, so let's start with the basics here before we get into the details on North Texas Angel Network.
sure.
What is an angel investor? Or maybe a better question is, what's the typical profile of your members at NTAN?
Yeah, a little bit of both. Angel investors are well. First of all, there's an actual term set up by the SEC, and in order to be an angel investor, you need to be an accredited investor, and an accredited investor, and it's something you can look up on Google very quickly and see it. But
Accredited investors are actually exactly who we're trying to target here with this podcast.
fantastic. And so that means many of you already know who you are, but for those who may not, the basic understanding of it is it's someone who has $1 million in assets, not including their family home. And then there's also a couple of other ways to do it, which is having income over 200,000 individually or 300 as a couple, and not just 1 year, of course, kind of a consistent thing. But the basic, what the idea is with those terminologies is it's someone who does not have debt that is something they have to really focus on, has assets that they can put into a risk category, and it's not going to cause them, to be, in serious danger, as long as they only use 5 or 10% of their portfolio towards this kind of activity. So anyway, so that's accredited investor, but there's some famous folks that are angel investors out there. We all have seen Shark Tank. Mark Cuban is a angel investor, and that's what we would call an individual angel investor. Of course, he has a team of folks that help him out, and but also Reid Hoffman, who, for those who don't, he was the founder of LinkedIn. And Lori Greiner is another, of course, also from Shark Tank, and then there's impact investing. Bill Gates, again, all individual investors. He loves to invest in companies that can help the environment. And just a small personal note of not fame but interest of LinkedIn. I have a letter from Reid Hoffman, which I hopefully have saved somewhere, that I was one of the first 1 million adopters of LinkedIn when it came out way back when. So,
Oh, way.
it's
Wow.
kind of good news and bad news. I was looking for a job back then when LinkedIn came out. So, but I love LinkedIn, and we certainly use it in our ecosystem here.
Yeah. So, so great examples of some angel investors. What would you say qualifies angel investing or distinguishes angel investing from, say, venture investing?
So that's a really good question. So, and you also asked about what is our profile within North Texas Angel Network, and also know that there's about 240 angel networks around the country. And North Texas Angel Network, or NTAN as I'll call it, is very similar to that. We have about 65 members, and these are folks that are looking to invest in companies that or take a part of their portfolio. Many folks, most have a stock portfolio. A lot do investing in real estate, and then it gets to that. Hey, where else? What else can I do beyond what I'm doing now? And that's where, for those that want to engage with founders and get into this whole exciting area of the startup industry, angel networks are great because when you join an angel network, you're taking the value of not just investing yourself in an angel in a startup, but you're getting a curated list that the group comes and we have similar type events like Shark Tank. Only, we're not billionaires, but we have, maybe 4 companies almost every month that will pitch to us. And the value for these members is a couple of things. One is it's a curated list of companies that are more or less around the seed stage. They have some, a little bit of traction. So they're in the range that that these members are looking for, without having to go and start all on their own and try to find companies to invest in. And then
Do you have
also,
guidelines like they have to be generating revenue, for example?
we do have guidelines, and I would say to founders, we call it criteria, and it's on our website. And I think it's really, I see it kind of like when you apply for a job. When people apply for a job, they look at the criteria that they ask for, right? And you don't have to meet all the criteria. For example, yes, we love revenue, but sometimes a company can make great progress hitting all the other criteria that we have without having revenue. So that makes them a good candidate. And so it's just like I said, if you use the job application as an example, look at ours or other types of investors' criteria. And if you meet most of them and get a sense that, hey, this I could, be interesting to them, then it's worth applying. And but don't just blindly send out applications to organizations without seeing what types of companies they invest in.
Now, if you were to do 100 deals in a year, let's say, what's the hit rate? Would you say, as a percentage?
You mean
I've
how
read,
many applications we get?
or no, what I meant is, so I've read some books on venture capital. I'm a private equity guy myself, but I like business books, and so the general statement in the books that I've read was like, these Sequoias and whatever, these venture firms are typically going to hit around 10% of the deals that they invest in. Is that hit rate applicable at the angel level as well?
You mean in terms of exits?
Just having a profitable investment. So if
I
you
see.
deploy
Yeah.
into 10 deals, how many of those will generate ROI?
Yeah, the general term in venture capital world is about, in angel investing, when you go in here, the data nationwide, if you will, is about 20% become successful. And we are we did not, as an organization, do it was a decision made by previous directors to track the deals. So we've been tracking since 2022 or so. And as I mentioned, I joined a company and we had an exit, and it wasn't a super multiple exit, but we did exit with that company through NTAN, and we had a small exit that kind of we invested, and the founder found an opportunity to have a quick exit. So we've had a couple of small exits, and we have in the 25 or so investments that we've made over the last 3 years. We haven't lost anybody yet. There's a couple that certainly are on the, not looking so good, but we have some that have got some really good, promising forward activity, and we're very excited about a lot of the investments that we have made.
Are you able to talk about these exciting deals, or is that?
Oh no, would love to talk about
let's talk about one or two of
some
your
of our
most
founders
exciting
that would say, please do, tell people about my company. And in fact, I just heard from the one that I think resonates with us being on a podcast. Especially, there's a company called Podup, and PODUP, and they have basically SaaS for setting up a podcast. And I think you, if anybody, knows all of the software and all the different things you've got to figure out in order to run a a podcast. And so they make it easy for, if you want to start a podcast, instead of having to deal with all the technical stuff, you check in with Podup. They take care of that, and it's SaaS, so it's a monthly fee based. Which, speaking as investor, there's nothing we love more than ongoing revenue and focus more on services or software than selling hardware one at a time, because that's a tough one for us to see it go. That takes big money. And so anyway, so we in this case we invested $150,000, and we used what's called an SPV, which I'm sure you've talked about on your group, special purpose vehicle, where we all put money in one LLC SPV and invested that way. We normally don't do that. We have this mantra as a group that we have 5 to 8 investors that get directly onto the cap table, invest directly in the companies, because we write checks. This is an important part about angel investing is versus venture capital. Is angel investors invest their own money. There's no general partner. And so all of my members are investing their own money and generally getting a term sheet directly to them and investing in that particular startup.
So
and
why in some instances are you going to create an SPV and pool capital?
Yeah, so when our internal rules that we've set up is we believe a cost of a SPV over 5 to 7 years that it will live, and will be about $5,000. So we require a minimum of 10 members, and then each are charged $500 each, regardless of the amount of money that they invest. And then the minimum that we require is $5,000, that's much lower than what generally a founder will ask for. And so we can get a lot of members in on an SPV. And
so for our audience, an SPV, a special purpose vehicle or single purpose vehicle, just means if Jeff and I are going to invest in the deal, he puts in 50 grand, I put in 50 grand, and then we create an LLC, Jeff Chihiro LLC, and then that vehicle invests into a deal, as opposed to Jeff directly writing a check to the startup and I directly writing a check to a start. But why is it that in some instances, Jeff, you will invest through that entity as opposed to everybody individually writing checks?
That's a really good question, and where it ends up is what the minimum investment that a founder is looking for. In the case of Podup, I don't remember what the minimum was, but let's assume it was $25,000. And in our case, and we talk to founders about this often, our members write checks in the range of $10,000 to 25,000. So, and 10, I have to say, is a very popular number in our group, which just happens to be where we're at as our particular network. And we generally get about 5 to 8 people investing. And but if we can get more than that, and sometimes we do. In the case of Pot Up, it was 12. And so that's why, and you can see it was more people putting in more than 5,000 each, but some put in 5 and some put in, let's say, up to 20 or 25. And then that ended up with this 150K number. So the SPV is great for us when we really love a deal, but maybe the minimum is hard for some of the members. And then other times the founders come in with a minimum of 10 or so, and then we just go directly on the cap table.
Understood. Now, what does it take for somebody who might be interested in joining a angel investor group such as North Texas Angel Network? How do they join? Like, what does that process look like?
Oh, that's a great question. And so we do get, we're always looking for new members, of course. And they do need to be accredited investors. And what I have found is they often reach out to me directly by finding us through social media or through LinkedIn. And of course, our members are a great resource when they meet people. They're often inviting folks. And the first thing I always tell everyone is, in order to decide if you want to be an angel investor, is to go to one of the events and experience it. And so that's the first thing that we, recommend. And so we allow people to come to 1 or 2 meetings and experience the event, and then of course ask them what their perception was. And I've had some that have come and said, "Thank you. Wow, this is just more than I can, comprehend." But others, you can just see their eyes light up when they start hearing the question and answer. Is one of the highlights of a pitch event, where we give founders 8 minutes to pitch and 8 minutes of questions. And very often I've been the person saying, "Man, that's a really super opportunity." And then I hear some really good questions asked by some of my members. And then all of a sudden I'm like, well, maybe not. And or I can often get more excited about a deal. And then also it's an opportunity for like-minded people to be together. One of our big focus is networking and allowing time for our members to engage together. And because we collaborate, everyone makes their own decision. We're not a group that provides advice. It's a really important part of everyone who joins a network, is that everyone's making their own decision to invest. But we do get the value of hearing others' opinions and thought process as it goes along. So we do collaborate together to decide if we want to invest in a deal, but then always remind everyone in the end, it's their own decision. So
now, do any of your groups, any of your members following investment additionally take on responsibilities as an advisor, for example?
Yes. And maybe, but more like I think it would be generally like what we would call an ad hoc advisor, not somebody who's, getting on the board. And these things can happen. But the cool thing about being angel investors, we're fans of the company and we know their early stage. And the founders are, one reason they look for angel investment, especially angel networks, is they know they're getting someone to help promote their business and to help them when they need things. They often will. We ask all founders to at least do a quarterly update. Often they'll do monthly. And within that, they'll do investor ask. And they're often asking, do you have contacts in such and such an industry? And we would really appreciate that. And so we find that our members are very engaged with the companies that we invest in.
Got it. Now, when we talk about a startup that gets funding from a network such as yours, are they typically getting their full equity ask from one group, or are they shopping multiple angel networks to get the equity that they need?
It's the latter, and I love the word shopping, but I'm not sure if shopping is quite the right word. But they're, for founders, they learn, funding is hard, and then also from an investor perspective, it's just like almost all other types of investing. Diversification is a great thing. And so generally, we often engage in deals where a founder is raising somewhere between 1 and 3 million, and our check sizes are in the range of 50 to say 300,000. So we're not going to be what we call a lead investor,
Got it.
and that's pretty typical for the way these things go. Is so if someone's raising 2 million, they will find a lead investor for, let's say, 250 to half a million, and then they'll find groups like us or individual angels, et cetera, or venture capital firms to invest and fill up their $2 million round. And so the answer is it's multiple folks, and we are part of that. So
all right. Now, as we move towards wrapping up this fascinating conversation, Jeff, what's your advice to a startup who's about to seek funding? What are the top to-dos and avoids? Your top advice for a startup?
Okay. My first advice, if you're entering into funding, is that be sure you have good legal counsel, and don't leave it up to others to decide how you're going to set up your company, and what kind of and you may get a term sheet, say from another organization. That's okay, but you need to have legal counsel to say that you've received a term sheet that is normal and customary and is good for you and for the investor. It should be good for both, because that's, you want everyone to be winners. And then the second thing I would say is a main to do is have a strategy. Decide, and learn, just like we tell our investors, learn the lingo. There's a great book called Venture Deals by Brad Feld, and he has always a couple of partners with him. It's a book that you can reference and figure out what it is that you're going to be looking at when you get involved in searching for funding. And so that when somebody talks to you about pre-seed rounds and friends and family and seed rounds and venture capitalists and angels, you want to know what those different groups are and where they fit in your journey. And so definitely make a strategy.
All right.
And the things not to do is don't give up too much equity to one particular group or whatever. The thing that makes us the most sad is when we look at, and I've mentioned the word cap table or capitalization table, is, yes, if you need investment, and that's great, but again, make sure that you're taking a balanced amount of investment against what you're getting in terms of value, and it's important early on that you're protective of that, because if there's a very young company that has given a ton of equity away, it's very hard for groups like us to see how that's going to be an investable, startup.
I will say that I have seen, not a lot, but a few venture deals come across my desk. And what I'll say is that there's a lot more like bells and whistles in the deal structuring compared to where I've cut my teeth in deal making, which is private equity, whether it's real estate or corporate. Mm-hmm. There's just a lot more provisions and complexity in the deals on the startup side. So So I think what resonated with me the most about what you said is for a startup founder to have great counsel. Make sure they're not making a deal with the devil when they're structuring a deal.
Yeah, Rick Stolmeyer, who was CEO of Mindbody Software, I saw him interviewed, and that was, first thing he said is, I know it costs money, but make sure you have legal counsel earlier than you think. So
yeah,
something
wise advice. Thank you, Jeff. Now, if somebody is interested in learning more about North Texas Angel Network, how do they find you? How would they get into one of your meetings and consider joining?
So we can be found on northtexasangels.org. And my email is the same, Jeff at what I just talked about. And also, well, that's the best way to find us from this venue. And I'm sorry, what was the second part that I was supposed to address?
That's it. I want people to be able to find you.
Oh, absolutely. And we would love to have you. And, and the last part of people say, well, do I have to prove I'm an accredited investor? And I always, it's a honor system, if you will. People do end up in the end signing a membership agreement with us, and they're agreeing with the SEC and their own conscience that yes, they are an accredited investor, but us or any other angel network, we're not going to ask you for your finances or anything like that. So understand it's a chance to get into an investing opportunity, and the best if you have an interest, and if you're local here in the Dallas metro area, I would say check us out. And if you're in another place, find your local angel network and see about joining a meeting, because that's again a great way to meet like-minded folks and to do some interesting investing in startups. And and I see you've got our website up there, and so thank you very much for that. So.
Yes, sir. That's my man Pedro working behind the scenes. So everybody, northtexasangels.org. There you have it. Jeff Murphy, the executive director of that angel network. And so that's a wrap, you guys. Thank you for joining us here at Beyond Stocks. Now, if you are local in Dallas-Fort Worth, in a matter of days on July 31st, we are having an in-person meetup. It's going to be really fun. It's going to be at a Chicken and Pickle location in north of DFW. So we literally only have a few spots left. I think 3. So please reach out to us. Our site. It's beyond-stocks.com. Sign up there and let us know if you would like to join our in-person event. So with that, Jeff, thank you so much for your insights and your time. And we'll see you on the next episode, guys.
Thanks so much for having me.